Hi everyone, Chris Swartz, managing partner here at First Choice Mortgage Advisors. And today we want to give you a little tip on how to win that next property and how to buy before selling your existing property. Because if your market is anything like our market here, you are going to find that it's very hard to get sellers to accept what they call a contingent offer. So a contingent offer means you have a home to sell and you need to sell that home, which is the contingency, before you buy your next home. Now, there could be multiple reasons why you need to sell to buy. The first reason could be you need the cash. Fortunately, we are in a market where there's a lot of equity in most of our homes. So if you're thinking about a move up, you may need to take that equity to move up. And we're going to get back to that in a minute. The second option is if you want to buy before you sell, you will need to qualify with both mortgage payments. So that's something that you can explore. You can reach out to your mortgage broker, hopefully me, and we can talk about your debt to income ratio to see if you can afford, from a debt to income standpoint, to qualify without having to sell. If you can check that box, then we've got a great option, which is called a recast. And with the recast, basically, you will be able to put less money down than you might think you need to purchase that next home. I've been getting a lot of people that come to me that say, Chris, I just need to sell my home so I can buy because we need that to get the 20% down, because nobody wants to pay mortgage insurance. I get it. So, but the reality is you don't need to put 20% down. And there's a way to quickly and inexpensively get rid of that mortgage insurance. You don't have to refinance. So here's what this looks like. If you were thinking you needed to put 20% down to avoid mortgage insurance, you can still achieve the same goal. You can come out, get pre-approved, and we can explore the process of a recast. What would happen is, let's say instead of 20% down, you're comfortable without selling your home, maybe with your savings, maybe borrowing a little bit from retirement, whatever that cash vehicle may be, you can come up with 5 or maybe 10% down. So now we structure the loan with 5 or 10% down. And then what will happen is, yes, you will have mortgage insurance. So, but we know that we're in a pretty hot housing market. So there's a high likelihood that once you're ready and you put your home on the market, it's going to sell quickly. We have a major inventory crisis. So if you get that house ready, odds are it's going to sell pretty quickly. So how do we get out of the mortgage insurance? So you've only put, let's say, 5% down. Now, one thing that people don't realize is the interest rate is actually going to be the same if you put 5% down, 10%, 15, 20%. You really don't see the slight break in interest rate until you put about 25% down. So whether you put 20% or 5% down, you're going to get the same interest rate. The only difference is the mortgage insurance. So what happens is you sell your home, maybe it's 2 months, 3 months after you've moved into your new home. And now you take that lump sum of cash and you contact your servicer and tell them you want to recast your loan. They'll send you some paperwork. There may be a nominal processing fee, $200-$300 for them to process this. And then what they will do is they will take that lump sum payment, apply it to the principal, and re-amortize your loan. So what does that mean? If they re-amortize your loan, they're going to take the remaining balance divided by the remaining months, the interest rate, and they're going to recalculate your new payment. So the first thing this does is it gets you that lower monthly payment as if you put more down. So there's a win right there. The second thing it's going to do is, if that lump sum payment puts you in a position where you now have 20% equity, the mortgage insurance is going to drop off. So now you've bought a home, you didn't have to sell, so you were more competitive in today's market, having a non-contingent offer. You were able to get a great interest rate, and you were able to get rid of the mortgage insurance a few months later after you've sold your home. So this, again, is called a recast. Now, not all lenders and brokers offer this, so make sure you check with the lender or broker that's doing your loan. We are a broker, independent broker, so we have multiple lenders. We can definitely set you up with someone that can help you and we'll recast your loan in the future. So hopefully you found this information helpful. If you have any questions, all of my contact information is right here below. Just reach out and I'd be happy to talk to you about a recast and how you can get the competitive edge in this market. And I'm Chris Swartz with First Choice Mortgage Advisors. Thanks for taking the time to watch this video.